So we had talked about savings and investments and savings and investment planning and plans. Yesterday we had started talking about stocks and stock investments. We're not going to worry about this bell work today. But we are going to talk about, I think we last left yesterday or finished up yesterday with talking about the stock exchange, the place where that facilitates the buying and selling of securities. So today we're going to talk a little bit more about price and market price. So the market price of a stock is the actual price each share is bought or sold for at any given point in time. If you look at a stock ticker, and I would pull one up, but it would be pointless, right? But if you look at a stock ticker, that is constantly changing. The prices of the stock are constantly changing throughout the day because people are buying and selling. When you have buying and selling, we talked about economics and law of demand and supply and how that creates price. Same thing in the stock market, except in the stock market, you have all of that information a lot more right in front of you, right? You know who wants to buy and who wants to sell and at what price they're wanting to buy and sell. So that really creates this market price, a standard price for that stock for a particular point in time. Right? And again, that market price changes throughout the day and can change rapidly. When the other day we watched the Trading Places Commodities Exchange, those prices changed dramatically in 5-10 minutes based on A, who was buying and selling and at what prices they were buying and selling. Also B, the news about the orange prices or the frozen orange concentrate price, to be more specific. Right? So there was this, must have been a cold winter. They thought, oh, cold winter, it freezes, their frost might have damaged the orange crop in Florida. That would cause a shrinkage of the supply of oranges, so fewer oranges would be available for purchase. I mean, if the demand stayed the same, then price would go up. Okay? Meaning, if I'm betting on the future price of orange juice, then I'm going to expect that will also go up and cost more. Orange juice will cost more. If we look now, I mean, right now is a crazy time in the stock market. And if you're watching the stocks and the stock market, you're seeing drastic price changes, depending. And some really good stocks could be purchased at a pretty good deal right now just because of the uncertainty, right? We don't really know what's going to happen. I can tell you companies like Zoom and Citrix and companies that are here to help, even Microsoft or any company that is all about telecommuting or teleconferencing, working from afar, working from home. Those companies are skyrocketing right now. And you're seeing things that, in the travel industry especially, travel industry is tanking right now. Well, it has to do with what's going on in the world right now. The COVID virus, right? So more people are telecommuting. everybody's everything is shut down, so everybody's staying at home. So they are telecommuting. So they are using services from Zoom. We're using Zoom. And Citrix is another online meeting, which means that they are subscribing to these services, right? Ergo, the company's going to make more money. So if we buy now before this thing goes up, then it's kind of like getting in on the ground floor, getting in on Apple on the ground floor. I would have loved to bought Apple at $25 a share when it's now trading at, this says $125 a share. I think it's a little different than that, but okay. So the changes that are happening right now are having an effect on stock prices overall, right? Your travel industry, nobody can travel. Not that we just don't want to, but we can't. So those stocks are not going to be making money. Matter of fact, they're going to lose money because they're giving out refunds. So you've got these factors or these things are happening in the global economy, or things happen in politics, or you might have some company news. We've talked before about Papa John's, and the founder used to be CEO of Papa John's. When he made a faux pas about, he said some bad stuff. Hey, that had an effect. There was some bad PR for him and for Papa John's. They tried to distance themselves. Things can happen good. If Lilly came out today and said, hey, we just found out that one of our current drugs in our drug pipeline actually can be a vaccine for the COVID virus, Lilly stock would shoot up drastically. Even if it hadn't been gone through the FDA approval yet, it's still going to affect their stock price, because we're banking, there's some of us out here that are banking, oh, that's going to cause their stock price to go up. Ergo, I'm going to buy now and I'll sell it later. So it's all speculation, right? Stocks are about speculation. Your stock index is simply the Dow Jones is a Dow Jones Industrial Average is an index. The S&P 500 is an index. The Nasdaq Composite. These are all indices. So they've got a group of stocks, and they're tracking the average price of all of those stocks. So if we look at Dow Jones, so the Dow Jones Industrial Average, it's 30 stocks. There are 30 stocks in the Dow Jones Industrial Average. 3M, American Express, Apple, they're from different sectors, right? McDonald's, Chase, Johnson & Johnson. So they've taken a cross-section of the market and said, these are the stocks that we have, that we say we're going to watch. And then that's how we get this price here. This is the average of, or the performance of all of these stocks that are listed down here. So it's a performance indicator. It's giving us an indication of how well the market is doing or not doing, right? We can see right now we're at 21,000. It's been worse. It's been down to 18. It's been a lot better. It's been up to 29, almost 30. So we can tell that we're not in a good place right now. We could be getting better soon. Hopefully soon, right? So that's the stock index. So how do you decide whether or not you're going to buy stocks? So we will look at some factors. One factor for sure is by observing. The first step is looking at the economic trends and social trends. We look at what is trending now, what is going on now, those kind of economic and social trends to know what then is may affect the stock prices. Think about those industries that are going to be affected by what's going on in the world by looking and analyzing those economic and social trends. So, people on the outset of this virus saw that there were, saw some issues and said, what industries may be affected by this virus? And sometimes it happens later than, sometimes we think of things right away and it's kismet, right? Other times, last month when we were seeing what happened in China before it came over here, that was a good time to buy into Zoom and Citrix and all of those online industries and get out of some of your other industries like the travel and luxury industry. Then you identify the companies and do some research. Decide whether or not you're going to buy, sell if you already have it, or hold. Those are your three options: buy, sell, hold. You can't hold it unless you have bought it, right? Buying is the buying. Selling is when we don't own it anymore. And then holding is just hanging on to that and waiting for something else to happen, right? Either we're going to hang on to it and hope that the price goes up, or we're going to hang on to it to get some more information to decide whether or not we're going to sell or buy more. Those kinds of things. So doing that research, you want to learn about the company before you buy their stock. Just because you like the company does not mean, hey, I'm going to buy this stock, right? Again, I'm going to say it again. Just because you like the company does not mean that you should buy the stock. That's an emotional purchase. We've talked about emotional and logical purchases before. That's an emotional purchase. And if the company started doing poorly, if you have an affinity or a like to or toward this company or this stock, you may be less likely to cut your losses and walk away from it and make that logical decision because you made an emotional decision to purchase it in the first place. So just because you like a company doesn't mean you necessarily buy the stock. Do the research. Find out about the company. The internet is great, right? Yahoo Finance. The company will tell investors. There's usually almost always, if it is a publicly traded company, there's an investor page where it's going to give you some information, like the financials. The SEC is one of those government agencies that looks at over the financial markets and makes sure that the companies are above board and are filing their reports and that they're accurate and that information is going out to the public. All right. So when we're looking at this research, when we're doing this research, we want to know, has the company been making money? If they haven't been making money, then probably need to get rid of them unless there's something on the horizon where we think we're going to make some cash, some real cash real soon, right? Okay. This is your earnings per share. Is how that's what it is called. Okay. And it's reported on the sticker or the ticker. I mean, if you want to look at a little catch you a little but a stock price or a stock what it used to be in the paper. Okay. This is our the high price the last 52 weeks, so the last year, our low price for the last year, the stock or the company, right? The stock symbol, dividend, the current dividend, if there is one. Some do not, that we've talked about. Your dividend yield, so this is a percentage based on your price, your close price, and then the amount of dividend. It's a percentage. Your PE is your price earnings ratio. This is the volume or how many shares that we've traded. And then we have a high, today's low, and this is what we closed at, and this is the change from our opening. Sometimes you might also see an opening. You'll have this has a close. You'll have an open, which is the open prices, what it started out to be. So that's what those things look like in a newspaper, right? Your earnings per share is EPS. It's telling you if the company has been making money. Your PE ratio is the price to the earnings. So if it's a large whole number, okay, for every dollar then that you're putting in, that's telling you your ratio back. So it takes, if your PE ratio is 28 to 1, it takes $28 to make your $1. Do they pay a dividend? Is there growth there? Or are we looking for a speculative stock? Is this something that's just short term that we're just going to in and out, right? If they owe money, if they have a huge amount of debt, maybe that's not a company that you want to purchase into. How do they look, or what's the comparison? Can we compare them to other companies in the same industry? And how are the managers doing, right? How management of the company, is it doing well, or are they floundering? Are they struggling? Those are good indications of how we think the company is going to do in the future. And then you overall need to ask yourself the question, should I invest at all in stocks? It could be risky. I might not get my money back. That depends. That's on you. There's economic factors, right, that we talk about, and how those economic conditions might affect stock price. So awareness of those kinds of factors will enable you to make better investments. Think about inflation. Higher prices, if there is inflation, those higher prices might lead to lower spending. This recession that we're in or that we're facing. Interest rates, as the cost of money changes, your profits can change, increase or decrease. Consumer spending, right now people are not spending very freely. So these are all things, that affect the stock price based on these are the economic factors that can have an effect on the stock price. Employment, yes. If people are losing their jobs, what are they not doing? They're not spending any money because they don't have any money. So that's going to affect overall corporate profits. That's one of the reasons why the stock market's tanking right now. Well, not right now, it kind of bounced back. But one of the reasons why when this shutdown has caused a shock to the stock market and stock prices tumbled because it was clear that there were going to be people that were going to lose their jobs or go out of work because of the shutdowns or the quarantines or the self-imposed quarantines. Therefore, consumer spending is going to go down. Some of these people, high-end luxury items are not going to be purchased as much unless they are absolutely necessity, right? So there are those economic factors. You also have corporate factors. We're going to skip through this one, and I'll come back to that. But we do have some corporate factors as well, if you're looking at. And, that I talked about those before. Are the company managers making good decisions? Is there growth potential? Do they have a lot of debt? Those kinds of things. This stock picking example, I am going to ask you to look to do some research. That's your assignment today, is to do some research and go through this process. Observe some social or economic trend that's happening right now. This example, Steph Curry got as popular, got an endorsement deal with Under Armour. So, and then think through what industries would be affected, the competition, identify those companies, and then whether or not the company has been doing those corporate factors. Have they been profitable? Are they making money? And how is their PE ratio? What is their PE ratio? Are the marketers, the managers doing a good job? Are they paying dividend? We've got some growth here. As far as earnings, do they have a lot of debt? Do they owe some money? It seems like $818 million is a lot, but if you're talking about a multi-billion-dollar corporation, it's not, right? Do your research. Look at other companies in the same industry. Have they Has the management made good decisions? Looking at news headlines for the company, are they positive or negative generally, right? Then I've put in some social trends, right? So you could look at some different suggestions for things to Google. But we are not going to go through the actual stock market project. But your assignment for today, tomorrow, is to do that 4-step research, right? Oops. This 4-step process. Find a trend, identify the industry or industries, companies, and then do some research. Ultimately, for this fourth one, you're really just going to tell me whether or not you would buy, sell, or hold the stock. But I also want you to back that up. Yes, you should buy the stock because there's a large growth potential, or you should sell the stock because this is going to happen. And then have a great spring break, and I will chat with you more when we return. We'll finish up chapter 19 after spring break. Enjoy.